What is up, guys? It's TimeForDillon back at it again with another crypto video. Thank you guys for tuning in. You guys are awesome. If you're new here, subscribe, bell icon, get notified when I post new videos because it's all time sensitive. In today's video, you already know we got to start things off strong talking about jpg.store finally releasing information about the JPG token. So I'm super excited about this. I know you guys are too, so we have to talk about this first. And then, of course, Charles Hoskinson pointing out this ridiculous tweet from Telegraph. Just utter stupidity right here. I mean, there's really no other way to put this. It's stupidity. It's not ignorance anymore. These people are just straight up fudders. That's the bottom line. They're mutter fudders. That's what I like to call it. So we got to talk about this tweet. And then, of course, got to talk about what the hell is going on with Coinbase. The SEC sending a Wells notice to Coinbase. If you guys don't know, the Wells notice, that is like the last step before they take a regulatory action against the company. As we all know, Coinbase is the most regulated company on the planet, especially here in the United States. They follow everything to a T. They work with the regulators to get things pushed out to the public. How does this make any sense? It doesn't. In my opinion, it's straight up extortion. But I'm going to get into that. So make sure you guys stay tuned until the end of this video so you don't miss out on any of this important information. Of course, we got to talk about what are the repercussions on the broader crypto market. But first things first, as always, got to take a quick look at the crypto market. As you guys can see, things are looking pretty good. It's a nice Sunday. Give me a GM down below if you guys are still here on Sunday in the Cardano space. Shout out to you guys. But of course, we're up 1.49%, almost 1.5%. Still above 1.1 trillion, we're up to 1.17. We've really been holding this area quite nicely ever since the bank started failing. You guys know, we had Silvergate, Signal, First National, Deutsche, well, now Deutsche, Credit Suisse being taken over by UBS, and more to come. More to come. This is just getting started. Just like in 2008, what happened? The first bank went down in March. It took 6 months for us to see the real repercussions in the stock market. That's exactly what's going to happen this time. It's going to take time for this cascading effect to mature and blossom into the clusterfuck that it is. That's just the bottom line. And you guys already know what caused this. It's a combination of greed and stupidity. Stupidity, printing endless money, thinking that money can just be printed out of nowhere with no consequences. What does that do? Well, that makes the Federal Reserve have to do something. The only option to get inflation under control is to raise rates. Now, here's where the greed comes in. The greed comes in from the fact that the US government had set interest rates to 0% since the 2008 financial crisis. It should have never lasted this long. For 15 years. It was set to almost 0% rates. Why? For an emergency injunction due to the financial crisis of 2008. They should have ended that years ago. But they kept it in place because they're greedy bastards. That's the bottom line. And then what happened? When we printed money during the COVID pandemic, the crisis, right? Of course, we had to print the money. Whatever, I get it. What happened? People made deposits, put all their money in the bank. Most people. What did the banks do? Greedy bastards. They lent it out or they put it in bonds. The same bonds that we're talking about here. 0% interest rate bonds, close to 0%. So what do you think happens when the Fed raises rates, people? Those bonds become worthless. Then you guys panic. I panic. We all go to the bank. We withdraw the money. Guess what? Fractional reserve banking, baby. They only hold 10%. Oh, wait, no. Thanks to COVID, most of these banks were relaxed down to 1%. We are in a huge liquidity crisis. Most people don't realize it. I hope you guys do. I hope you do. I know a lot of us are in the NFT space exclusively. In Cardano exclusively. That's cool and all. But you gotta pay attention to what's happening with these banks, because that's gonna be horrendous. If we have a massive bank failure like 2008, it's going to be on a much grander scale, because now we are all on the internet. We all communicate at the speed of light. Boom, poof. We are all now living in abject poverty. Now I know that sounds a little extreme. I hope it doesn't get there. It might not get there, but it certainly could. So just prepare yourself. Know what you're doing. Hopefully you have some crypto. Hopefully you got some Bitcoin and some Cardano. Ethereum and all the other ones, I'm not too sure about those. I am positive about Bitcoin and I'm positive about Cardano. I know you guys are too, so shout it down below. But taking a look at the market, I'm sorry about that rant. You guys already know how it goes. Bitcoin moves, the market follows. That's why everything is up today. Cardano back up to 36 cents. And then XRP looking like it's going to be settling with the SEC very soon. Still up to 45 cents, looking fantastic. So moving on along, let's talk about the topic of today's video. JPG token finally getting released. So how do we qualify, right? Well, let's read what they have to say. The majority of the rewards will be split evenly between buying and selling volume. But we didn't forget about the founders. Very cool. I love the fact that we're taking care of creators. Because if it wasn't for creators, none of us would be here. It's just the bottom line. So creators are going to receive an allocation based on the collection's overall volume. Very cool. And guys, this is just season 1. So we're just getting started here. Next, okay, projects that have been flagged by the community as rug pulls and or inactive projects will be ineligible. Watch traded volume will be disqualified. We'll provide more info about that in the future. And of course, all of this made by the JPG Foundation. Moving on along, we got to talk about this. Charles Hoskinson, Telegraph, going Telegraph. Savage. Look at this BS article. I'm so sick of liars. I just can't handle liars. People that knowingly fabricate information. There's no excuse for that. Or incompetence. That, at best case, this is just incompetence. This person does not know what they're talking about. At that point, I would say, what is Telegraph doing? Hiring someone this incompetent? But see, I don't think it's incompetence. I think it's pure stupidity and malice. Really, at this point. But of course, look at this. Cardano, right? Staking Cardano is an attractive way to generate passive income. But there are still some risks that users should consider. A potential risk of staking ADA is a high transaction fee. What? A high transaction fee? I'm sorry, I remember $300 transaction fees on Ethereum like a year and a half ago. What the hell is this guy talking about? High transaction fee. As such, it is essential to research each pool's fees and rewards before... Research? You mean look? Right there when you're going to select it? You call that research? Damn, bro. Additionally, since staking pools must remain on... What? Must remain online 24/7. What do you mean? This is just stupid. This is just pure low IQ take right here, or incompetence. I don't know. I don't want to give them the benefit of the doubt because they always do stuff like this. So I'm gonna say, yeah, this is low IQ. What do you guys think? Drop it down below. I'm curious. Anyway, moving on along. SEC warns investors. This is so ridiculous, dude. This little lizard brain right here. Look at him. Little lizard brain. SEC just warned investors that crypto assets are at risk of significant losses after $2 trillion in market value was already erased. Long after a brutal bear market kicked off in cryptocurrencies, the Securities and Exchange Commission is warning investors that cryptocurrency investors are exposed to extreme risks that can ultimately lead to significant losses. The only risk that I can see is the SEC not regulating or giving clarity. Why won't you give clarity? It's beyond me. It does not make sense. Unless you think about it from the point that these fuckers are greedy. They don't want to give up power. They want to maintain the status quo. They want traditional finance to remain in power because they have control over it. They don't want decentralization. They don't want people to control anything because in their minds, democracy by the people for the people is mob rule. And they think you're stupid. Now it makes sense. So I just think it's utterly disgusting and dishonest on so many levels. And I just felt like sharing that with you, my opinion. Hot take. I don't care. I'm going on vacation right now. So maybe that's why I'm just in a great mood and I don't care anymore. You know? But what do you guys think? I'm curious. I will leave you guys with this. Brian Armstrong saying this. And I love this guy. I love the level-headed, articulate response from Brian Armstrong. I have to say the SEC Wells notice has caused a noticeable boost in morale. I feel the same. I feel empowered. I feel zealous. I feel like we need to get out in the streets and scream at the top of the lungs at these bankers. But let's keep reading. Nice to have a common cause, but never forget the main goal is to build better products for our customers. Improving the policy landscape is necessary, but not sufficient. And maybe that's why Coinbase is starting to set up operation in Puerto Rico. Smart. Screw the United States, dude. These people, they don't want you to succeed. They don't want you to operate in their system. They want you out of here. They want to kick you to. They want to take the money and kick you to the curb. That's what they want. But that's all I have for you guys today. If you guys made it this far, you guys are awesome. Make sure you guys smash that like button, drop a comment down below, and of course subscribe to the channel if you haven't already. I did just drop lesson 3, learning Python using ChatGPT. If you guys are interested in that, I'll throw the link up right here. But other than that, I'll be out of town for a couple days, so I'm not going to be posting videos. So you guys have a beautiful one. Unless something crazy happens, then I might just do a little phone video. But that's all. You guys have a beautiful day, beautiful night, wherever you guys are. Dylan is out.